Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update our view on the Forex market. So in general, you could see a reaction on the recent FOMC meeting, statement and comments from the Jerome Powell. So market mostly is treated as a dovish. So market would like to hear and see dovish notes, and it has got it. So in fact, most reaction stands because of Fed said that maybe in the next year this will be the moment for the rate cut. But at the same time, Powell said that if needed, the Fed could rise rate in January, for example. So I would treat the overall comments as a neutral. So I do not see really big shifts and changes compared to what he said last time, because on the background of the statistics that we've got, actually somehow market just forget about what we've got just on the last week and see only what it would like to see. In particular speaking, dovish notes and promising of the rate cut. It's the only thing that markets right now are watching for. But in reality, with some data that might be a bit stronger in the next few months, for example, I'm speaking about inflation, maybe job reports as well. So that could change significantly the expectation. So it has happened already in last week when we've got the positive payrolls, when we got actually 2 days ago, more or less strong CPI numbers. So I think that this is yet too early to speak about the sharp reversal, and this reaction might be short term. That's what about the fundamental background. If we take a look at the technical moments, then from the technical point of view, the chances on a downward continuation now looks a bit, well, significantly lower than they were before the Fed statement. And it is not about only the euro currency, but it's also about the performance of the dollar index and the 10-year yield. So if we'll take a look what we have on the 10-year yield, you can see based on the comments, yields just collapsed. Now they are going to 3.8 target, which will be daily oversold on XOP. But in general, if you remember and you recall what we discussed on the very long-term charts, I tried to show you it here, but I suppose that this might be the levels that I have plotted here will be don't let us to see it. Okay, probably you will get the idea. Recall what we talked about this one. So we said it's very strong downward action in the yearly chart, and first retracement up, and this will work like the bread and butter. So if it's really true, then the retracement on the yields might be significantly lower, somewhere to the 2% level, maybe slightly higher. As you understand, on this background, dollar will become definitely weaker. Reasons for that, it's difficult to say, either the rate cut or something else, but well, this is really what could happen in the long-term perspective, in the next year, for example. And the performance on the 10-year yield that we see right now is just might be the part of the puzzle that we see on the yearly chart. We will see it. On the dollar index, also take a look. This drop is not good for a hand shorters pattern. So as you understand now, with this collapse, the destiny of this hand shorters is really thin. So it might be really the failure, and if it will be the failure, where we get downside continuation. Correspondingly, on the euro currency, you could make the same conclusion. If market will not turn down right from this point, where it stands right now, we will get upward continuation back to the top. In this case, we could say two things. First of all, bread and butter on the weekly is done, in terms that no downward action will happen anymore, and this target will not be reached. Second, we probably will get big A, B, C, bottom, D pattern. So that's two conclusions that we could make. But this probably will be interesting on the next week. right now, as the market shows this upward action based on the Fed, take a look at come in touch with the MACD predictor. So let's keep watching what will happen here. If market will form the bearish grabber, that might be a different story. So we will see what will happen today and tomorrow. On the lower time frames on the 4 time frame chart, market also stands at the 618 resistance. It's 109.05. So it's really possible that grabber might be formed. On the hourly chart, we do not see yet anything, but as long as the market will stand here, we need to keep an eye on what will happen. If we'll get here the bearish patterns that also will take the shape of the grabber on the daily chart, that might be not bad idea for at least for attempt to take the short position. For now, we do not have anything, so we have actually two different ABCDs with this ABC bottom. Market already hits the XOP, but we also have this larger major ABCD for this hand shorts that we were considering yesterday. Hand shorts, by the way, work done, as you can see. And it stands around 109.37. So somewhere in between 109.05, 109.37, somewhere here, we need to keep an eye on what will happen within a couple of days. And then we will understand what's going on. Just to keep it simple, if market will form any bearish patterns, grabber patterns here on the hourly chart and start dropping, it means that we still will get the chance to have this ABCD. If conversely we will not have any patterns here, market just will break this 618 level and start moving back to the top with the same significant pace, it means that we need to drastically change the scenario and start watching for bullish trades and a bullish continuation on euro currency. That's the things that we need to keep an eye on.